In the United States of America, the tax code is really centered towards entrepreneurs and property owners, and is one reason why investing in long-term real estate is so lucrative. In this video, I discuss the many different tax benefits to owning rental real estate at this current moment in time, and how they work. Before the video starts, I would like to preface it by saying that I'm definitely not a CPA, and this is not legal advice, and all of this is merely my own opinion. Also, any of these laws could change in the future, so if you're watching this video a while after it's been uploaded, these rules could very well have been easily changed. With that out of the way, let's get onto it. Hello, my name is Max Monahan, I'm a real estate agent in Portland, and let's get right into the tax benefits for rental real estate owners. Before that though, please be sure to like the video if you're enjoying it so far, it does really mean a lot, and definitely be sure to subscribe as well if you enjoy personal finance and real estate related content. Anyway, let's get on to the first tax benefit. The first one is repairs. You can generally write off repairs and maintenance needed on rentals as long as they're deemed ordinary and necessary. For example, if you hire a contractor to fix your roof, that cost most definitely can be written off as a business expense. The second one is travel. If you ever decide to travel out of state solely looking at / buying rental properties, you can write off those long distance costs. So you can write off plane tickets, hotel rooms, travel costs, food costs, etc. Every cost can be written off. Every cost that has to do with your rental property, you can write off. And this includes public transportation and Uber if needed. Number 3 is property tax. All property tax based on the percentage of how much the rentals take up can be completely written off. So, for example, if you own and live in an identical duplex and rent out the other side, otherwise known as house hacking, which I have a whole separate video on that you can check out after this video, you can actually write off 50% of the property tax for the entire property, as one side is being used for the rental property. And of course, if you just have a regular rental property, you can write off 100% of the property tax and really lower your taxable income. The next one is depreciation. Divide the value of the building, not the land, by 27.5. Then multiply this by the share of the building dedicated to rental activities. For example, if you own and live in an identical duplex and rent out the other side, you'd multiply this number by 0.5. And of course, if it's just a regular rental, you just keep the base number. So for example, if you own a property that you're renting out and the value of the building is $200,000, you can write off $7,272 a year. The next one is business expenses. Anything and everything that has to do with running your rental real estate business can basically all be written off. So this includes, but it's not limited to, a computer, a printer, internet, a phone, a desk, etc. All of these can be written off as a business expense for your real estate empire. The next one is utilities. Every landlord handles utilities differently. However, if you choose to cover things like gas, electricity, water, heating, and AC for your tenant, they'll be tax deductible. If you pay for internet, cable, or satellite, you can also deduct those as a utility expense as well. Even if your tenant agrees to reimburse you for utilities later, you can continue to file the rental property deduction and claim the reimbursement as income. The next one is legal fees. Landlords can deduct certain professional fees in relation to the rental property. If you use a CPA or computer software to prepare your tax return, be sure to deduct the cost. Hire a lawyer to oversee rental paperwork at any point during the year, deduct those exorbitant hourly fees. Use a real estate agent to find your tenants, deduct the commission. Advertise the property in a newspaper, over the radio, or online, deduct those ad dollars. Even advisor services can be written off so long as you meet to discuss the rental property. If you have to evict someone, this deduction would help cover the legal and court filing fees. These are all considered operating expenses and should be deducted as such. You cannot, however, deduct legal fees used to defend the title of your property or recover and improve the property. There is an important distinction. The second to last one is interest on the mortgage. You can write off the amount of interest you pay for the rental property in a mortgage entirely. For example, if you own and live in an identical duplex and rent out the other side, you can write off 50% of the interest from the mortgage that year, and that would be 75% total as for homeowners, as you can write off 50% as part of being a homeowner in the United States. And the last one is insurance premiums. For example, if I decide to get earthquake protection included in my home insurance and I'm renting out the other side, half of that cost can be written off. And that's it. Thank you all so much for watching. I hope you enjoyed learning about some amazing tax benefits to owning rental real estate. Please don't forget to like the video if you liked it. It does take quite a bit of time to make each video, and be sure to subscribe for 2 videos a week on both rental real estate and personal finance related content. Until next time, see ya.